Wealth, a show produced live exclusively for our clients here at Jazz. Tonight's show is open for all, giving you a sneak peek on how we help our clients get their dough straight. So grab a glass of your favorite wine or a tasty scotch and let's get your dough straight.
You mean I gotta start? Oh. Hey, how's it going, everybody? I think I did it this time. You know, I was talking for the last 5 minutes. I've been just going about my business here, talking. I see that it's working, but I didn't hit live. And that's what happens when you leave me here by myself to try to do something unique. Welcome. Happy Wine and Wealth Day, everybody. How we doing today? Can you just hit me in the chat and just say, yes, we see you, so that I don't have to do this all over again? And grab a glass of wine. Come hang out with me. Tonight's wine, by the way, is the wine of wealth. Our special wine here. It's a Chilean Cabernet that we had made, actually. And look, I'm sharing all the stuff tonight. Right? One of our clients made us 2 of these, actually. Beautiful. I keep one here all the time to hold the glass of wine. I got to shout out to James real quick. James sent a handful of cigars. I appreciate it. He said for our next poker night there. I happen to be an Aladino fan, so that was good for me. I appreciate that. I don't know if that's something we're supposed to show, but man, I appreciate it. I hope you guys are having a good night. This is not a mistake, by the way. This is public, right? So you can watch. If you're in the dojo, which is our client portal, you're seeing this. If you're on YouTube, you're seeing this. It almost worked. Anyways, like I was saying 5 minutes ago, I'm going to do like I always do. And I'm going to go through everything sort of in line here. So there's not a lot of back and forth in the beginning because the majority of our clients actually watch the replay. They don't have the time to join us live, and that's okay. No problems. But I do need to cover a little bit of homework. Number 1, 2-factor authentication, now mandatory. And if you're in the dojo, you have been prompted to set that up. We prefer Google Authenticator, but you do have the text message availability as well. Number 2 is the office trades setting. If you're a research member or one of our clients, you know that every day we do the office trades at lunchtime where we show you everything that's going on, talk about the good, bad, place some trades, and kind of try to teach as well. Just wanted to alert you there that if you see some office trades videos that look a little rough, I plan on just doing some teaching from the laptop. So if I'm at home or something and I have a thought and you see me just pop on there and start talking about theta or some sort of portfolio metric, I like to teach as well. So I want to work that into the equation so you can learn along the way. And also, if you have not heard yet, All That Jazz, we're calling it All That Jazz, the ability for us to manage all your accounts, whether they're here or not, right? So I think we're the only advisor that says, hey, we'll actually just manage your 401k too, your TSP, your 529, your HSA, whatever it is that you want that you can't move to us physically, that's okay. We now have the ability to just go and manage it there for you, just like we do your accounts here. It's all included in our service, so there's no catch or gotcha or anything like that. We just wanted to be the advisor that said, it's okay if we don't have the account. We'll still help with it. We'll still physically make the changes for you to keep your dough straight, right? Because that's the goal there. So if you're interested, of course, just let one of us know. We will send you a link, get the legal stuff out of the way, and then we will actually go and essentially hack into your 401k to manage that directly for you. So cheers if you're interested in that. And no requirement, by the way. You don't have to do it. Tonight, we got the glass of wine. We've been having a whiskey and wealth sort of last couple weeks, but today's a special one. We got our wine here and apparently some cigars hanging out with us. We are going to go over the portfolio performance. We got a little off track there, right? COVID hit. The world sort of went crazy. I like to do these once a month. And admittedly, it has not been once a month. So I'd like to go through, update you on the performance of each one of our funds. I'm going to go through it. I won't look at the questions too much here so that our clients that watch the video can just go right through it and get what they need. But then I'll stick around as long as you guys like. We can talk about anything really at that point. But I'd like to jump in if you're into it and I hit the right button. Oh, yeah. All right, so first thing we're going to look at is each fund individually. Actually, this is what we're going to look at, right? And I really want to point out how things are going so far this year. Good, bad, or ugly. There is no physical ability for me to update, address, edit, or somehow disguise these numbers. This is direct from your account. You can actually do the same thing I am doing here if you would like to follow along. Naturally, if you made large contributions, large deposits, large withdrawals, your performance is going to vary because you're taking money in and out. I'm just going to go over the raw performance of the funds themselves, okay? And each fund is a little different. We're comparing to the S&P in this case. If we're going to talk about small cap or something, we might compare to the Russell 2000 or a bond fund. As you see, I will always have a comparison in the chart as well. It's important to see like how you're doing relative to something else. So if you have any questions, of course, let me know. Now, I'm going alphabetically. I'll probably bounce around a little, to be honest. But what I've done is I've set the chart up to start. Okay, so it's 0 on December 31st. So we're looking at true year-to-date performance. And maybe I'll just go over here. If I can slide out of the way. You don't need to see me, right? I mean, just what are we doing? All right, so our aggressive mix is comprised of a handful of funds here. We manage all of them and we make the decisions as far as the positions and everything for you. We don't buy ETFs, so none of this is made up of ETFs or some mutual fund or something. Think of it as the aggressive stock fund is our own personal ETF that we make that has no expense ratio or anything. You guys know that. I don't have to tell you that. Anyways, the aggressive stock fund currently is, well, it's weird to say it this way. It's outpacing the market. Basically, it didn't fall as much as the market. The light blue line is the S&P returns during the same period as the aggressive stock fund. We're hovering around the flat line, which I'll accept because, oh, this is a day behind, by the way. So this is where we stood as of yesterday. At midnight, it will update to today. So fair warning. Basically, anything you could assume, fell today. So we're doing all right. We're hanging in there. Remember, we have currently, it's an odd number. It's 31.34% in cash. That's why we didn't fall as much. We had cash prior to the decline, so very helpful there. If you go, oh my gosh, I'm super worried about the market, well, I was one step ahead of you, all right? So we had cash going into the end of last year. We've been building it up slowly to the tune of 31.34%. That's actually in cash. And so that's our aggressive stock fund. You're going to see some other, these are all the funds actually. You're going to see a few other types of funds in here. Some of them are we were just playing around trying different models. There is no bank beater fund. That doesn't exist for clients. Maggie Mix was something we were playing with here in-house. Municipal bonds, those don't exist to clients, so I'm not going to cover those because they don't really do anything. Okay, so we've got the aggressive stock fund. Consumer staples, if you want to take a look at that. I hope that this just works. Okay, it's working. And then I'll come back after we're done to go over some of the more details. Of course, we'll stick around as long as you need. But and we can zoom out, we can look further, we can do all the great stuff there. Let me make sure this works. It does. Okay, perfect. Consumer staples is a slow and steady fund in general. It is compared to the S&P. It will never beat the S&P. It's not designed to. The key thing here is see the volatility. If you're a client and you have the consumer staples fund, you want to see that your performance is squished, right? It can be higher or lower once the market starts moving around, but we don't want to see lots of volatility in the consumer staples fund. It is not supposed to be volatile. So the main takeaway from this one and a couple others is performance, of course, but how volatile is it? See the difference? Market's obviously been volatile lately somewhat. We have the consumer staples fund nice and tight. That's what we focus on with consumer staples fund, as well as a few others that we'll cover here as well. Defensive stock fund, if you've been looking at defensive stocks lately, they have, I would say 50-50. Any defensive fund, if you were to break it down, I would say about half the area has done well and half has not done so well. That's probably a fair description of most defensive mutual funds or ETFs that are out there. We're in about the same camp. I'm happy that we didn't fall as much. I'm a little disappointed in the volatility, right? So I'm not going to sugarcoat anything if it's not good. I'll just tell you because you got to know that we're working and doing stuff here. I'm a little disappointed in the volatility. This is one fund that I spend time on lately trying to figure out how we can play that game there to lower the volatility. The dividend fund, okay. So the dividend fund I had compared to, we don't have a dividend thing in here. We're working on it. It'll be in the dojo. So here's dividends fund performance. Market down about 7% year to date. The dividend fund down about 1.53. That's not a fair comparison. We ideally should be comparing this to a dividend-based fund. So that's my fault, right? That should be, I don't know what the performance would be of something else, but that one should be updated. Nonetheless, one problem with the dividend fund, look, anytime if you're building your own funds or you work with an advisor or you just joined us and maybe you're wondering how things go, a dividend fund should not be volatile. I mean, it's going to have normal, just day-to-day volatility, but it should not be as volatile as the market. And I'll admit that this is just about as volatile as the market. Obviously not as much, or it would be swinging around, like the market. But, well, let's try this, because we don't have a dividend thing. What if I go to large cap? I can put the S&P on there. Yeah, this is a great example, actually. You see how it's pretty much as volatile as the market? Just a little bit. And to be fair, it's 0.79%, right? But I don't like that. I would like the dividend fund to be less volatile. And so that's one of my homework items. And I'm going to mention those as we go. The defensive fund, the dividend fund. We got to lower the volatility in those there. Government bond fund should pull up here. Sometimes that one doesn't pull up. So, yeah. So government bond fund, although the 10 years not posting, or maybe it's not perfect. So for some reason, this is going great, by the way. So compared to the 10-year, the government bond fund is doing slightly better. It's not amazing. It's a tough time to be in bonds. If you have any kind of bond funds in your 401k, something like that, you'll notice that. Not a lot of you participate in this, and that's by design, so not much else to say there. Our international fund is actually doing quite well. And actually, I'm not going to say like it's us that is causing this. International, in general, actually doing well, besides like South Africa had a rough night last night, but it's one night. All in all, they're doing quite well. So the problems here, volatility-wise, are in the States. And maybe, like Brazil's doing really well, but it's still very volatile. Anyways, that's been helpful. As you look overseas, and if you're in the international fund, we have small allocations to this, but I'm actually happy with that. I'm sort of disappointed we don't have more allocated to that, and it might be something we look at as there's any kind of a pullback. But again, this should not be compared to the S&P, so don't let me mislead you and say, oh, the S&P's down 6%, you're killing it up here. You wouldn't compare an international fund to the S&P, and you get why that is, right? Because it's not the S&P. All right, taking a look here. Large cap fund. This is a weakness, right? I never come here and say like everything's perfect and rosy, because it can't possibly always be perfect and rosy. Our large cap fund is more volatile than the market, and that's with extra cash. So I'm going to actually just tell you exactly what it is. So we have extra cash in that, and boy, if you look at some of the positions in there, it's a lot of biotech and a lot of semiconductors, to be honest. That's where all the weakness is in the large caps. You've seen that if you've been watching the market or the closing beat. We have a lot of great positions, but man, they've taken a beating lately. We have a very small position in Netflix, about 2%. I would add to that, actually. Paycom's a 1.4% position. Monster maybe getting bought out, but that's still pretty weak. So I'm naming off some of the weak stuff in there that overall we have a gain in, but man, it's been kind of pummeled. Our financials in the large cap are doing great. I'm happy with that. And some of the other weakness is biotech, right? Big biotech, IDEX labs and things like that. So work to be done here. This is on my list. This is something where I'd actually like to use some of the cash, 31.81% in cash. I'd actually like to use that. The trouble is it's creating, it would create more volatility. So I feel I'm forced to let the volatility subside a little bit. And truthfully, like if I'm being honest with you, I hope it just gets worse first. And then I want to scale up some of our positions. Of course, our clients, you can see inside the funds. You can see the positions. I have to be careful about maybe saying some of the positions live and know that obviously none of these are recommendations and you should consult with a financial professional, and this is just for research and review only and blah, 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 right? So be careful with that. But to be fair, large cap anything has really struggled. I've been looking at a lot of your 401ks, those of you that have come on with all that jazz, and as I make changes in there, I'm tempted not to. Right? I almost want to wait, hold out, and scale into a little bit of that. So that's the real rough spot. And while I'm at it, I don't know if you have small cap funds. Our small cap fund is no stranger to volatility either. I'm thankful that this one is not falling and is as volatile as the Russell 2000. Oh, it's there. Okay, perfect. This worked. So here's the Russell. We're comparing it to the Russell 2000. All right, this is great. So little less volatility. Again, having cash has been helpful here, but be critical of me for a second, or let me be critical publicly, right? Think about this. We have 36% in cash. There is no reason we should be as volatile as this or be underperforming as this. This is a main focus area for me. I happen to be a small cap guy, so I like I'm very familiar with a lot of small cap names. I spend time looking at those because I'm familiar with them. Home builders, real weakness in the home builders, the small guys. The LGIH is a symbol, but LGI Homes is the name of the company. Things like that are starting to show that weakness and put that drag on the Russell 2000. And to be honest, that's kind of weighing us down a little bit. We have extremely small positions in almost everything besides energy, right? And energy is a little tough when you're looking at small caps because I'm over here today. We have PDC Energy. Look at that, it worked. How about that? We have a 6% position in PDC Energy, and we have had a large position in them. Other than that, our next largest position is, I'm just looking at the percent sizes here, 2.79, 2.32, 2.76, 1.04. So we've been great having some lighter positions in the normal, everyday, small cap type stocks. Energy has been one that's kind of helped us out. And to be honest, it could be that if we didn't have larger energy positions, we might not be doing any better than the Russell 2000. So work to be done there, and it's one of my favorite places to look, so it's something that I definitely play with. I did bounce around, I'm sorry. Might as well do mid-cap. A mid-cap growth fund is a bit of a snoozer, I'll be honest. I've been waiting for action here. It hasn't done a whole lot, and if you look, this is the Russell mid cap. I don't like this so much because there's so many stocks on the cusp of falling back to a small cap or working their way to a large cap. It's a tough place to invest right now, but I'm fine with it. It's just it's been a snoozer. That's been one of the quieter areas if you're looking around. So I don't have much new to say there. You don't. How was I saying it earlier? When things are quiet, you sit on your hands. Right? Don't force yourself. If you're an investor and you're watching and you kind of see how this goes, if nothing's happening for you and your portfolio is quiet, don't force yourself into doing something. Right? That's the worst thing you could do because then you're looking for stuff. Let things come to you would be the lesson there. And this is how I feel about mid-cap stocks right now. We can come back and expand later. What are we missing? Some of the moderate growth funds, there's not a lot of people participating in these. I'll point that out. They're not supposed to be better than the market. They will never fall more than the market. They will never rally more than the market. So they're playing along just like they should. We don't have anybody in these at the moment. Mild aggressive growth. This is one we're phasing out. I had played with some ETFs in the past, but I find them to be boring because we could do something better. So mild aggressive is performing perfectly fine. It is supposed to be mildly aggressive. It's not supposed to beat the market, and it is not beating it on the way down. I'm happy with that, but I could probably count on one hand, which has 4 fingers, the number of people that have that fund. Oh, real estate. Yeah, I don't want to miss anything, and then you guys get mad at me. Real estate's a very tough area right now, and I'm going to pop over here to kind of show. Well, I'll stay here for a second. So one of the more volatile sectors of the market lately, compared to itself, has been real estate. Again, real estate is not very volatile, and so you can't say, oh my God, it's one of the more volatile areas of the market. No, that's tech, that's communication services, right? That's even utilities lately, that's bonds right now. That's not a sector, but you get what I'm saying. Whenever I say it's a volatile sector, I'm saying compared to its history, compared to how it normally moves, it is currently more volatile than normal. So we don't really we wouldn't have a client that's all in the real estate fund. I wouldn't do that right now. But if you have any larger portion or we've customized something for you there, yeah, it's a little bit more volatile. The yield on this, I believe, is over 5% now. 1 second for me. So we've got a higher yield here, and that's because of the volatility and some of these names pulling back, 5.54%. So that's okay, right? It's just rates are changing, right? The housing market, I don't know if you guys have seen, but the number of houses under construction is not really going anywhere. Meaning, I didn't say that right. There are more houses going under construction that are not completed than we've ever seen. We're at like 10.1 months to finish a house. We're normally around 7, right? Just a little lesson for you. Normally a house for a builder, you're looking at 7 months is about their average. Not for all of them, but that's where we normally, when we look at the housing data, you're at 7 months. Why is it 10? it's not for lack of demand, it's for lack of product, right? So real estate's having a tough time because any exposure to builders, whether the single family homes, multifamily homes or anything, God forbid, like I said this the other day, let's say they order 50 kitchens, cabinets, right? And 5% of them are messed up. You're going to wait 3 months to get any cabinets back. That's hurting them right now, and that's hurting the price of the stock as well. I rambled there for just a second. I tend to do that. Sorry about that. I don't know where I was going with that. Yeah, that's basically what I wanted to share. Oh man, I genuinely lost my train of thought. That's it. Yeah, I'm going to move on because I genuinely forgot what I was saying about real estate there. Anyways, so now that's the performance of the funds. You know, as a client, go in there and look, right? Look behind and see how things are going, and you can also drill in to see individual positions. I'm not going to show the individual positions here because technically that would count as a recommendation. I would get in trouble. I can say, yes, we own it. No, we don't. I just can't show you the whole thing. But as clients, of course, you know you can see every single position down to the fraction of a share if you are interested in that. And yeah, so if you're watching the recording, of course, that's where we drop off here. I will take any questions. If I recognize that you're a client, I will try to prioritize a little bit for you. I do apologize. You notice I don't do the public ones often because, you know, it's not fair. You guys have questions and we should be spending time on that. But if you're here and you're watching and I said something that threw you off there, let me help. Yeah, let me see what I can do. Tabian, Dustin, you did the dividend income fund, but you skipped the dividend. Oh, they're the same. It's the same thing. So when I build the models, I have to put it in the system, and then it's essentially unpublished or published. So if I showed you that one, it wouldn't be fair. I think it's doing worse because I've never really touched it because it's not published. So you actually, it's not available. Whenever I build like, hey, I'm trying to work with the defensive fund, you might actually see two of them there. You wouldn't see two of them there, but if I showed you the screen, you'd see two defensive funds. One is sort of a model that we're working on. The other was the actual fund. So I was actually showing the actual fund. Yep. Charlie, wait, I got to look at that question. We're talking about Charlie getting into the industry? All right, man. I love it. Not many people getting into it, so I love that you're doing that. If you don't mind sharing, which series license do you hold, and do any of them impede your ability to trade and invest as an individual, like conflict of interest? Series 65 and the state license. We're also registered with the SEC on the federal level because of people are, we have clients in every state, and now our size actually, but we have clients in every state. It can be tricky to maintain your own. And by the way, the market is whipping around right now. Like, I don't know what just happened. And I say whipping because in the after hours, a move of 10 points one way or the other on the S&P, that's whipping. Normally not much happens. And there's everything. You got bonds, crude oil whipping around. You got the Dow up 100 points. It was just flat a second ago. I always look at it. Like, my life is just always looking at the market. The NASDAQ's up 40 points, which is not much, but I don't know what just happened there. But anyways, congratulations. Yeah. You do have a lot of compliance issues when it comes to having your own accounts. You have to prove that you're not trading ahead of clients, which to some degree can be automated, but it's kind of tough. Yeah. Thanks, Cody. Oh, sorry. JN's curious why you charge the monthly 417 and the 1.5 AUM is. I hit the 75 minimum, but you always get hit with the fee also. Yeah, the 417 is adding up to the $75. When you get to whatever point in the year it is that you would have hit that anyways, it'll drop off. That's Folio's charge. So they basically say, we got to get $75 to allow you to do all this stuff. And once that triggers in there, you just won't see it anymore. Especially if you're going to hit it. Most people, it's not a problem. What's a safe cash level with inflation? Well, I mean, it would be wrong of me to say anything higher than 32%, right? So little looking under the hood, you see some of our funds have 32% in cash. And so if I said more, then, hey, why does Dustin not have more? If I said less, then why you say less if you have more? So you can kind of tell my thoughts are 31, 32%. That's also a little bit biased because we don't choose random things to do. So I will never make a decision that's just a thought or an opinion or a belief that something will go higher or lower. We find that we can have 31, 32% cash and not suffer. Any more than that now, and we start to suffer, and I've got to answer to you guys, what are you doing? You suck. You're dragging behind. The market's still going. Did they just call off like the war or something, or not have a war? We're up 0.5% in the S&P. Yeah, so 31, 32%. Yep. Hey, in case my questions don't come through, how to trade Roku on the open. Cash in the portfolio effect, performance versus benchmark. Wait, are you asking? You're asking a bunch of questions. All right, so first of all, got a different keyboard here. Where did it finish off? 112. Ooh, yes. Yeah, it closed. So closing price right around 112. Going to be a big gap down on Roku. I said yes because a client asked me the other day. They were thinking about taking some of the loss and then going to buy something else, and I was like, you got to take a shot, you know. So what do you do on the open? What do you mean? Like, do you buy it? J-Dub, help me out with that. Are you thinking you want to buy that break to fresh lows? First of all, you wouldn't do it on the open, in my opinion. 130 on the Dow. It's crazy. So help me out with that one. Tell me good things about gold. I mean, good things lately, yes. Gold has finally woken up. That was a trouble spot for a while, right? Look at all these times it tried to break out and do its thing. Didn't look like it was going to do anything. Now we're in sort of a clear zone for a moment. You don't buy it here, but now we're in a clear zone to where people will go, hey, gold's waking up. Maybe I need to go do something with gold. Other than that, I don't have much else to say. I don't have much else to say there. You're correct, Tabian. Yes. You increase cash from 25 to 31. You still believe the market is at a high? No. I'm looking now I'm looking to put the money to work. I'm not trying to increase cash now. I have not increased cash since just after Thanksgiving. So there's no selling on the way down. It's time to get to work. Yep. Lithium too, by the way, Jason. Mark says, if you're trading stocks in your traditional IRA, is there an issue with short-term trades and capital gains? The brokerage firm may have an issue with you doing short-term trades, but capital gains and stuff it's not a concern because there's no tax, right? You can trade as much as the brokerage firm will allow you. You can't, well, on the surface, you can't day trade, right? But you can buy stocks and do whatever you like there. How long is the waiting list to become a client? I don't know, actually. I honestly don't know. There's a lot of people there, but I'd be guessing. That's something we don't have a data point on because we hope not to have a waiting list. I don't like that. Like, what business likes that? But all is good. Hey, Daniel, for the All That Jazz service, you just email you if you're interested. Yeah, absolutely. Any one of us. It could be me. Cody's helping me get everything going as far as getting everybody kind of onboarded. But yeah, I'll be here. Ian, yep, I know. I see you on there, man. Fridays. It'll be a good day tomorrow. Any idea when we'll be taking new clients? Very, 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 very soon. Yeah. I have been pacing like a madman because I like doing this, man. I wanna, keep growing and expanding and stuff, but like I told somebody the other day, we got to tidy up. Everything's got to be nice and right. I'm one of those freaks that likes everything to work. Day trade, I know. So the traditional play from day traders is going to be to short it on the open. I've never been able to do that. I used to teach day traders in China, thousands of them actually, and that was a strategy they would pick up on really well, and they would always ask me to do that. Whenever there's a downtrending stock that gaps lower, I can't wrap my head around the fact that you're going to short that. But that is the play. And in fact, on the open, you get that first 5-minute sell-off, and as it starts to bounce, that's what people use as a short. I will never do that because it doesn't click in my head. But that is the thought process there. Yeah. And there we go. I got logged out. Okay. Wonderful. So, sorry, 1 second as I load that up. Did you see that poor Congress lady that wanted to do a live video? I don't know if she'd ever done one. And everybody was hating on her. I don't know if she was Republican, Democrat, or whatever, but ooh, that was, they call it cringeworthy. I felt so bad for that lady. I don't know who she is or what she did, but hell, the video could have been edited for all I know, but I was like, oh, man. Because you can't ignore that. But they didn't like her, whoever she was. Sorry, I do these things. So where we at? Am I crazy? And I'm going to try to scroll back because I know I missed something. Am I crazy, or is there a good way to play ATBI, purchase Microsoft through Leaps? Or through the deal on January 24th, deep in the money. So I've never been good at that. Just be honest with you. You will never see me buy a long-term option. You know, everybody has like their thing. Like I had a customer that all they do is trade Russell 2000 futures. That's their fun. I like it. I don't love it, right? I had a client that trades bond futures. That's what he likes to do. I've just never been good at it, right? So when it comes to buying long-term options based on a deal, I always in my head think that's like biotech. I'm buying something based on the belief that the FDA will approve and the phase 3 studies will actually go well and we'll get this thing to market and they'll make a lot of money. I don't like that. And I don't have that makeup, and thankfully that's probably makes me like a good longer-term investor because I don't like to take those kind of risks. So I'm a bit boring in that aspect. I would apologize, but I don't have a great answer for you. Yep. And I don't follow that enough to get excited about it. Is Cody still gung-ho on Penn or DraftKings? I don't know. We'll have to ask him in the office trades. I'm the only one here tonight. You know? I know you're not supposed to tell people that, but I'm the only one here. It's Florida. Safe in Florida. Skyline says, confessing here, haven't been tuned in for a while, but what's the reason why you can't take new clients? So we built our entire portal. Let's see if I can show you something. So we actually stopped and said, we have to rely on third-party software and all this stuff. Charlie's got a demo account I can show you here. And it was frustrating because we couldn't have the features that we wanted, so we said, we're just going to build our own. And so this is what we built. Actually, go here. We built out our own portfolio to show balances, performance. There's a lot coming here. All of our funds, you can view the holdings, you can see updates, the classes down here, dividends being paid and all that stuff. The stuff that clients were asking for, we had no way to show in a real reasonable way. And we got to a big enough size where we said we could just build it ourselves, but we can't take new clients while we do it, or we're bound to mess something up. We probably could have done it, but I don't, you know, Lord knows, if I do one thing wrong as an online company, you know, you either admit, fall on your sword and say we messed up, or someone's going to talk bad about you. And I just want it to go well for everybody. So I said, well, let's build out our software, and there you go. That's the answer. It's been tough. It's been fun, but it's been tough. General thoughts on leasing a vehicle over financing. It's personal preference. I actually don't mind. So for me, all I care about is that the dollars add up in the grand scheme of things. I've actually done a class on exactly how much you should pay for a car if you're going to finance it, how it should break into your finances, including insurance. You'll never be upside down on a car. We go through the whole study and everything. But if you want to lease a car and your life requires that, I have no problem with that. And it's actually worked out quite well for people that leased a car like 2 years ago, right? General thoughts on, I asked it. I missed your question? No, I was asking my guess is all the people that buy the dip go in. I don't want to miss your question, man. I'm sorry. They get flooded and everyone. It could be. But J-Dub, my thought behind that, he's asking about the Roku on the open there. My troubles with it is who's getting flushed out after it's already down and gaps lower? Like, I like the ones where maybe we're moving sideways and you get a gap down underneath everything. Now you have a whole group of people that could be temporarily worried. All right, I understand those selling off. But the downtrend that we already know they're selling. Oh man, admit defeat. Then it gaps down. I just worry that that's like the final nail in the coffin. So I can't get excited about that, man. Yeah. Anyone else see? No. So the comment, Kathy Wood caught my eye there. Kathy Wood on CNBC with that. So obviously very aggressive what she's doing, and I don't dislike her. I'm just fascinated why she's always plastered on the front page of CNBC. How is she any different? I don't want to be on the front page of CNBC, but there are so many great fund managers out there. T. Rowe Price has some of the best that can beat the market on the way up and not beat it on the way down. And that's the holy grail, right, as a long-term investor. So what is she doing? Like who did she pay to be always on there every day, Kathy Wood? I'm like, I'm fascinated by the marketing that's happened there to go from non-existent to very famous in the financial world. That, to me, that's fascinating. Yeah, that is fascinating. Your high class hotel in Georgia, did it happen to be Sea Island Resort near say? No, it was the, I don't know if that's a nice one too, but it was the Chateau Elan, which I'd never been to. I'd heard of it, seen it, and that was cool. I'm going back up, by the way, because I'm missing stuff. Thanks for the explanation. How big is Jazz Wealth grown? AUM. So we haven't grown a whole lot in terms of adding new clients or anything, obviously, but we're at just shy of 200 million, actually, which reminds me, I have to do that every year. You're required to fill out the ADV thing, and I have no pen, and we're due to do that. But just about 200 million now, and there's pen, and sorry if you can't hear me, and lots more to grow, right? Thank you for that, by the way. Sometimes I see something, it reminds me. Neil says, in Nest Egg, I see no questions about mortgages in retirement. How is it calculating my success without that info? I'll bet you just missed it. So if you put in a mortgage and you're not putting early payments or you're not actually making extra payments, then your mortgage is amortizing just as it should throughout the rest of your life, even if it goes to retirement. If you see that you have no mortgage payments in retirement, then you might have put a number in there that made it show that you would have the balance paid off. You might have accidentally put a balance that was too low if you didn't link your mortgage. There's a number of things there, but let me know. I'll dig in. I'll tell you exactly what the issue is, because if you are supposed to have a mortgage, let's say you just got a 30-year mortgage, it should be in there, and it does have that ability. Anyone want to buy snow? Nope, I'm borderline sweating here. It got warm. Thoughts to Philip there. I am retired and sensitive to drops in my long-term holdings. Like since the beginning of 22, I don't want to give back everything from 21. Well, that's something to address, right? I mean, there's no reason to not to be ashamed of feeling that way. This year has a lot coming up, and we've already hit a lot, right? We know we got rates going up. We got inflation that we can all tell is there. Every company that reported earnings said it at least a dozen times. You know that? There's your fun fact. Every company in the S&P that's reported earnings so far, we have a few left, said the word inflation in their conference call 12 times or more. Yep. So there's that. There's, I guess, a potential war, right? You got the midterm elections. What are the rates going to do? Historically, 3 rate hikes put you into a recession. So those thoughts are legitimate, and you have to address it, right? We got to take time and look through it. We got to figure out, how do you strip out the volatility? Like I was showing with the performance. I closed it, son of a gun. Like I was showing with the performance there, it's not always about, when for someone like you, right? You're retired. You don't care if you beat the market. That's a bonus. You care about the volatility of what you have. So I was showing how some are less volatile than the market, some are more. So that's the focus. The starting point is to address the concern by talking about volatility. Performance can always be added back in along the way, right? But I don't mind a conversation like that, because it's only going to get more volatile as we get towards the midterms, right? She must get the eyeballs, man. Yeah. Timothy Rogers. And sorry, Tim, man. So Tim's a client. I know that. But that's why we only do these classes publicly every now and then, because normally there's not that many questions. So sorry. So you want to go about setting up portfolio margin account like yours and how much capital I would need to put in. I want to build a portfolio like that after you show me the ropes. Depends on the brokerage firm. Some of the larger known brokerage firms they're somewhere around 100,000, 125,000. Some of them make you pass a test. I think TD Ameritrade still makes you pass a test, so you have to answer like 12 questions or something to prove you know what you're doing there. And that's pretty much it. Yeah. Average account size, I have no idea. Honestly, I don't know. It's not large compared to other advisors because we have a lot of clients, but 30,000? Maybe? Don't know. J-Dub, you satisfied with 21 performance due to the cash reserves? Well, it was close, right? Thankfully, things kind of flattened out in some of the areas there, but we were getting to the point where we were going to drag behind if the market spent January and February of this year moving higher. And I mentioned that in our last portfolio update that, cash is fine, and we all probably have similar beliefs that like, well, there's a lot of trouble ahead, but I can't justify that. My job is to grow. So I was actually very grateful for the January decline there because then it shows like, see, we had the cash, right? We didn't fall as much. Appreciate thoughts on the Great Reset and how the Fed coin. Yeah, so the Great Reset is a byproduct of searching online for things that you want to read about. Everything is an algorithm. Like my stinking Facebook shows me airplanes for sale because I'm looking at airplanes. Not to buy one, but I love airplanes. So you would think, and to me, it seems like airplanes are really expensive. I don't know. Maybe Facebook's showing me ads from airplanes that are just more costly than others. I don't know. I just like looking at them. So in my mind, I think airplanes are really expensive compared to what I was used to seeing them. The Great Reset is very similar. There's a lot of people that have this belief of a Great Reset. I would argue, did we not start that in 2008? Was that not a pretty big reset? Granted, I know what you're talking about when you say the Great Reset, but was that not a big do-over for at least a small portion of companies? So does that give a glimpse into what could happen in the future there, like how that would go? I don't believe that first of all, I don't believe that what would be the Fed coin or the dollar coin, I don't think that's actually going to happen. But I don't see that. I see the potential for a reset in people going back to work, people stop spending money, people realizing that money doesn't come from the government, out of helicopters. That part we have to digest. So agree or disagree with how we got through COVID, that was a lot of money being put into the entire world system. That has to be digested. It has to be pulled back. We have to get the Fed to stop like they're going to do. We got to raise rates to a normal level and get back to a point where, you can afford what you work for. And that's maybe a harsh way to say it, but that's where we're at. Kids have money that, is just very odd that how much money they have relative to what they do. So, you think there'll be no war? That'd be nice. Nobody likes war, but I don't really follow like the details of the talks and stuff back and forth, but that'll be fine. It was a lot of work for Russia to do to have no war, though, right? You imagine that? It feels like they need to get something out of this. And I'm not taking Russia's side, but I'm saying you move that many people, take that many pieces of equipment and tanks and everything, just kind of seems like it's a whole lot of wasted money there. Daniel, for Fed tech stocks, PayPal, Facebook, semiconductors seem to be the main drivers for them. Can tech in general break highs at all during the hikes? No, I don't think it's happening during the hikes, but the trouble we have is we think Fed hikes as being a finite, like instant thing that happens. Have you noticed how they do it? They always do it this way. Well, at least since 1994. There's your history lesson. Since 1994, the Fed talks a lot first to prepare you for what they're going to do. Prior to 1994, they just did it and found that it's better off if you can do a little, they call it jawboning, if you can get people to believe that rates are going higher, lower, whatever it may be, then do it, it has less of an impact. And that's actually a study that they've done and published. So tech stocks won't actually go to highs during the process of that. Some may, but not as a whole. It's the belief of a pause in rate hikes. That's really what you're looking for. So it's not going to be that the Fed says we're going to pause. It's actually going to be many months ahead of time where the Fed says, we've raised rates 2 or 3 times now. We sort of like where things are going. We're more confident in maybe declining inflation. We're more confident in the economics. They look at, obviously, they're concerned about maximum employment. And that's where tech stocks start waking up, is when they start having those comments of, maybe we don't have to raise rates anymore. This is looking pretty good. Then we can price in what the value of an individual tech stock is based on where rates are at that point. So it will never be just like a one-day thing. It's always ongoing and sort of leading you into that. And that's my long answer for that one. You're welcome, Philip. How could or can financial institutions like JP Morgan manipulate precious metals, and where does that money go? I don't know if it was JP Morgan. I think it was Barclays, wasn't it? Someone can clarify that for me. I believe Barclays got in trouble for that, and currencies as well. How they did it, I don't know. I didn't actually go back and look, but it was possible apparently because they did it. Sold some covered calls today for February 18th. On what? Well, I must have missed what it was there. Yeah, so you're going for you're going for it there. So David says he's got a position, sold some covered calls, and tomorrow they expire. Gonna make 5 or 6%. If they don't get called out, otherwise he'll get called away if the stock goes higher, whichever one it is. And they don't close on the market close. They actually settle on Saturdays. So they would actually officially close like tomorrow at 8:15 at night. I think it's 8:15, 8:30. And then they settle on Saturdays. So you'd actually find out on Saturday, or see the change happen. Now, if it just expires worthless, then that'll just expire worthless at the actual market close. I'm talking about if you get if the stock price is higher than your call option. In the situation of break glass for cash on a taxable account, we email you and arrange that quickly. I suspect I have capital gains. So Connor's saying, oh man, found the deal of a lifetime or something, or I got married and turns out she's expensive or something. If you need money out of your taxable account, the reason I say let's talk about it or email me at least first, because I'll go into your account first and I'll try to find a way to do it for a wash. So I can pick apart all the positions in your account and say, here's how we're going to do it to get the cash that you need. Or if I have to give you bad news, I might say, you're killing it, right? But here's the smallest capital gain I can get you. I'll do a little homework for you. It doesn't matter the account size either. I do that for everybody. Don't give the IRS any extra penny than you have to there. Adios, dude. That's his name, so I can say that. Yeah, and he's right. While we're talking here, the S&P is now up 27 points. The overall action has slowed down, so whatever news event that was that just came out is calming down at the moment while we were talking there. And remember, you got a 68% chance of the market being higher. If you are one of our clients or you are a research member, check it out. This is what I did earlier on the closing beat. How many times when the S&P loses more than 2% in a day, I'm using the SPY, right? This is one of our tools here. I'll do 10 years like I did earlier, just to show you. So less than 2% over a one-day period. Yeah. So we look at that and we say, oh, come on, Charlie. You tinkering in there? Yep, apparently he's tinkering. So you got a 68% chance of the next day being positive, and then it was actually quite bullish. I showed it on the closing beat if you want to look, because, am I in the wrong one? I showed it on the closing beat, but I guess apparently we're getting started earlier, right? Middle of the night here. That'll make it fun. Anybody like doing that sort of thing, trading futures and whatnot? There it is. I was on the wrong thing. Sorry about that. S&P loses more than 2% in one day. For the last 10 years, it's happened a total of 70 times, including today. The next day is positive by about 0.6%, 68% of the time. We are currently up exactly 0.6%. Not that it stays there, but it's just kind of fun to look at. Yep. What type of assets do best during Fed rate hikes? Well, so believe it or not, consumer staples is one of them there. Specialty real estate does well. I mean, like not single-family homes like data center REITs. I think a lot of those are already doing really well. Losing it, man. I'm losing it. Yeah, especially data center type REITs. I don't think there's an ETF for that. I was trying to think of one for you. But things like that. You're welcome, Daniel. Tabian says, is a 5K dump in a low volatility fund too much at once? I figure the fund runs tight, that drop feeling. Yeah, so the low volatility fund is the type of fund you can draw large sums and put large sums in. It's not really moving that much. So if you go, oh, the market's fallen, 8% now, 7%, I don't want to put large sums of money in just yet. The low volatility fund doesn't move. It's just supposed to be nice and quiet. When the Fed raises rates, usually bonds will go down in price. Would it be better to cash out of bonds and see where the market heads? Well, so actually, I shared this on a closing beat one day. Bonds have already priced in 5 rate hikes, meaning they've already moved. It's over. So it was frustrating, and I pointed out it was because I heard an advisor say, don't be in bonds, they're going to raise rates. And I'm like, he obviously doesn't watch, right? Not me, but watch the market. So bonds have already priced in, I believe, just over 5 rate hikes. So if you were to close out a bond position now, you are closing it out as if the Fed has already raised 5 times. So it's too late. And I was going to try to find that for you. But that's the short answer. I think it was Tuesday, or Monday or Tuesday that I did the thing. I was going to try to find the chart. Was it Valentine's Day? Nah. No Valentine's Day. One last thing. Let me just look here for you, just to see. No, we were doing consumer price. Okay, sorry, I don't have it. I did it on the closing beat there to show Fed hikes relative to where bonds have just moved to. Yep. Yeah, there you go. Kevin got it. Justin just got a promotion. Not sure what to do with the extra cash. That's a good problem to have. Made me rethink your entire strategy, man. He's got extra money in his pockets. He's like, I don't know what to do. Justin, so first thing is do nothing, right? Enjoy your promotion. It's like, and this is not a fair comparison, but the first thing that any advisor would tell someone that won the lottery, we have one client that actually has won the lottery, state lottery, you don't do anything, right? You're excited, right? Just let the dust settle. If you're really that excited about a promotion. If it's a few extra dollars and you're just trying to be smart with the few extra dollars there, don't want that lifestyle creep to get in there, I understand that. It doesn't mean you need to save more for retirement. We always, and you should know as well, if we need to revisit it, we can together, but you should always know, how much do I have to save for my goal, right? And I'm not saying, 6%, 7% growth. How much do you need to actually save? And once we figure that out, put it off to the side, man. Don't save more because you have to. So maybe there's something else you might be looking to do. Maybe your life is changing for the better. There's something you've always wanted to save for. You might be able to start working on other stuff. Let me know, though. I'm happy to help. Let's talk about it. Where do you locate your tax filing download in the client portal? I'm not used to the new layout there. You could just email me. Oh, no, I wouldn't email it to you. So that's not the kind of stuff you want to send through an email there. You can either go into your folio account in the Statements and Tax Center, or now you can go into your into the dojo there, and you have your documents there. If they're available, they will show. Remember, though, you don't. It's on the left on the menu. But if you have an IRA or Roth IRA and you didn't take money out, right, or you didn't break a rule, you don't get a tax form. There's no need to have a tax form. Online name. Tabian, you're just filled with these I won't say your name, but you're just filled with these nicknames, huh? I think of building a garage and an in-law suite. Holy cow. With inflation being what it is now, especially with construction materials, labor, would be a good idea to do it now or wait. If you can wait, of course, you know it's going to get cheaper. Lumber just skyrocketed again, or has been kind of taken off. Electrical wiring, copper that's included in it, it's just so expensive. If you can wait, you go for it. Inflation has taken off like a rocket ship. Look at any stock, any asset, like crypto, look at anything you want. When something takes off like a rocket ship, like inflation or a lot of these, lumber or whatever, it always pulls back. All right? That's not a belief. That's true. Just a matter of when. If I could tell you when, we'd all be rich, right? Yeah. Rate hikes already priced into the stock market? I believe so. Yep. Yep. You'll still get volatility on the actual, at the end of March when they do their announcement. If they don't do it earlier, they're talking about doing it earlier. There'll be volatility on that day, but the Fed does, I won't say a great job, they do a job at actually saying, this might happen, this could happen, we're all thinking we might do this, some people really don't want it to happen, but the rest of us do, we're going to be meeting soon and we may do this, oh, we think we may do it sooner than we thought now, I think we're probably going to do it, it now makes sense to do it, and then all of a sudden they do it. So there's a lot of that annoying lead up to it, but it really helps soften the blow. You usually live on your 3 years paycheck? Oh, 3 years ago paycheck. I was going to say. Oh, I don't know. Just spread the rest out. There you go. Yeah. There you go. You'd be given a form for your individual accounts? Yes. Sorry, I didn't say that. IRAs, simple IRAs, Roth IRAs, things like that. If you didn't break a rule, you don't get a tax form. So that's good. Individual accounts, no matter what, even if you only made a penny, you will get a tax form. You got it. Yep. SQM doing well, starting to pull back. Where do I get in? I can't actually say, be able to say next week on the Thursday class. That's the difference between the public one and, you know, hanging out with you guys. We can actually be more specific, so sorry. I thought it'd be a good idea to just do a public one. Thoughts of a rate hike impact on financial stocks. It's actually already correlated. So financial stocks have performed well, second best performing sector in the S&P on the assumption of rising. And I should say it's not the large financial stocks that have done all the heavy lifting. It's the mid-size regional banks, brokers, things like that, because that's the lifeblood of their business. They've been loaning money for negative margins for so long that now they're going to get higher rates and be able to justify raising it. So regional banks and brokers, things like that. Good for them. What are your thoughts about a talk about recession? We can talk about it. Right? Somebody always thinks there's going to be a recession. The statistics are after 3 rate hikes, you find yourself in a recession. So 3 back-to-back rate hikes cause a recession. There's not a lot of data to go on because there's not many, I mean, rate hikes don't happen every day, right? So there's not a lot of data, but if you look at all the data going back to the very, very beginning of the Fed, that has been the case. Can you use my IRA as cash dividends and pull it out? You can pull out anything you like from your IRA, but if you're under 59.5, you will pay a penalty and you will pay taxes. Tax forms for the low volatility savings accounts will be out no later than the 28th. Yes, the 28th. And also, I put a note. You know, can I share something with you before I go? If you go into your dojo, it should be on this one as well. Ta-da! Big news. So this, by the way, is where anything I leave notes about you in our CRM, you see. Anything that I want to share with you, you see. So I put on here, tax form updates, retirement accounts are out, but only if you get reportable or have a reportable event, RMDs, early withdrawals, distributions due to divorce or inheritance, conversions, recharacterizations, individual accounts. There it is. I just wanted to get the date for you. 2/28/21. Everyone that has one of these accounts will get one. Ta-da. Yeah, I had a good time, guys. I'm going to roll. Hope you enjoyed, learned something. We do these every so often, and we'll do it every so often again. Yeah, that's all I got for you. I'm going to head out, and appreciate you hanging out. Clients, thanks for your patience. You know I do it every now and then, just like this. We will go back to the normally scheduled program starting next week, and I'll see you then. Enjoy. Hope you enjoyed, learned something. We do these every so often, and we'll do it every so often again. Yeah, that's all I got for you. I'm going to head out, and appreciate you hanging out. Clients, thanks for your patience. You know I do it every now and then, just like this. We will go back.